Hi, this is Jessica Darmoni, and I am here for another edition of Cboe Digital TV, where we talk about all things related to digital asset investing. And I am here with Noelle Acheson, industry colleague, longtime industry colleague. You have moderated a lot of the panels that my Cboe Digital colleagues have spoken on at Coindesk conferences. So I am honored to be interviewing you today. Can you tell me a little bit about your background and how you got into crypto?
Of
That'd be really
course,
interesting.
and it's so good to see you, Jessica, and thanks so much for this chat. I've always loved talking to you. My name's Noelle Acheson, as Jessica said. I am formerly head of research at Coindesk and more recently Genesis Trading. Now I'm focusing on an independent research project called Crypto is Macro Now, which looks at the growing overlap between the crypto and macro markets, which, Jessica, you can agree is now more important than ever and so interesting. And I publish a daily markets oriented newsletter as well as a free bigger picture weekly one. My original background, a long time ago now, in traditional finance. I was in traditional finance for about 10 years, doing corporate finance, research, ended up doing fund management in Spain, where I'm talking to you from. I left fund management when my son was born because back then it wasn't really compatible, with breathing. And then I set up an e-commerce startup back in the year 2000, which is dinosaur years in terms of Spain, the Spain tech scene. We were one of the first at the time. I ran that for 13 years, sold it 2013, trying to figure out what to do next. Catching up on reading about fintech and technology, what had been happening when I wasn't paying attention. Kept hearing about this thing called Bitcoin. Watched a video on Khan Academy. I don't know if you remember that. I watched a video on Khan Academy, and when I realized that we were looking at permissionless payments, I got goosebumps because I grew up in the middle of Africa in Zambia, and just the very notion of what permissionless payments could do in that part of the world just seemed so exciting. Obviously, it hasn't quite worked out that way yet. There's a big yet there. But it was all of the barriers in the way of that that got me hooked even more. I dove down the rabbit hole, 2016, joined Coindesk, left there last year to join Genesis Trading, and I left Genesis Trading at the end of August of this year to start this new research project I mentioned.
Wow. Okay, there are a lot of questions in there. I'll stick to the crypto ones. Can you tell me, we were talking a little bit about like that you were interested in Bitcoin and what you were doing at Genesis and Coindesk. And when we look at Bitcoin, there has been a lot of correlation with Bitcoin and the stocks in the past year. Do you want to talk a little bit about like how that's been so high? Is that going to continue? What do you see there?
I love that question, Jessica, because, as an analyst, one of my favorite things to do is take something that seems so obvious and then peel back some of the layers. And you see, it's actually telling a slightly different story. And the Bitcoin correlations with macro assets is a clear example of this. I used to think that, obviously the institutions are coming, the institutions are coming. We've been saying this for years. Then the institutions did come towards the end of last year. And so obviously, if the institutions are here and they are treating Bitcoin as a macro asset, then it's going to behave like a macro asset. So obviously the correlation with stocks is going to go up. And when I say correlation, I'm using Bitcoin and the S&P 500 because they're proxies for their respective asset groups. But if you actually look more closely at the data, it tells you a slightly different story. The correlation between the Bitcoin and the S&P 500 was below zero for much of this year and crossed zero on the way up, beginning of April of this year. It wasn't reacting to the institutions coming in to the higher volumes and to the greater macro activity. It reacted to one thing, and that is expectations of rates. Expectations of 250 and above interest Fed funds rates started ratcheting up beginning of April also. Coincidence? I don't think so. And we also know, Jessica, you've heard this adage before, that in times of fear, all correlations go to one. That is what we started to see back in April of this year. It was a fearful time. Correlations of everything started heading up. This doesn't mean that Bitcoin is necessarily a macro asset right now. We saw the correlations peak around about 0.8 on a 30-day basis back in the beginning of May. And then we had the implosion of the Terra ecosystem. Guess what? Correlations came down fast because Bitcoin had its own separate issues, which shows that, again, coincidence rather than causality. We then had another big implosion in the crypto industry in June with the collapse of the 3 Arrows Capital Fund, and that pushed correlations down even further, climbing back up again because fear, correlations do go up, but it doesn't mean that Bitcoin and stocks are joined at the hip. It simply means that they are assets moving to a range of stimuli. And I think what we are seeing largely there is coincidence. That doesn't mean that Bitcoin isn't a macro asset, though. I believe it is a macro asset. I just believe that it is still a good diversifier from stocks for the underlying narratives, whatever the correlations are telling us in the very short term.
That's very optimistic. I like that. I like that a lot. I like that a lot. I want to switch gears for a second and talk a little bit kind of about regulation. And do you, when we talk about regulation and we talk about the crypto markets, everything is very fragmented. And so like we're looking at markets that could have, different requirements, this and that. Do you see global requirements coming into fruition? Do you see that actually happening?
The short answer is no. The long answer is also no. And the reason is that every single regulator operates in different systems. I live in Europe, you live in the United States, and we are both living in very significant economic powers with meaningful sized markets that have very different regulatory structures. You have a battle going on at the moment as to who is going to regulate crypto markets. We sort of have that sorted, and our battle is moving now to what do we do about DeFi. Very different approaches, very different institutions. I don't see the regulators of markets around the world agreeing on the who and the what, let alone the how. Winding back to the what for a second, that is also something we're seeing very different approaches. Just this morning, we saw that the UK has, the House of Commons of the UK, the lower house of the UK Parliament has passed a bill that would, if it continues to go through the process, classify crypto assets as regulated financial products. The United States is nowhere near that stage yet. And here we have the UK, the seat of one of the large financial centers of the world, already creating a relatively, what looks like an intriguing framework. So how would they ever get together to agree on something when there are, let's face it, even bigger issues that they are struggling to get agreement on? But here's the thing, Jessica, I don't think that's necessary. I used to think that was necessary because crypto is a global asset class, operates around the world and can move freely across borders without much impediment should it want to. I don't think it's necessary any longer. I think that the market will end up with a choice. We will have regulated crypto venues and we will have unregulated crypto venues, and there isn't really anything anyone can do about that. Regulation is really a luxury. It is a luxury if we want to count on certain protections and liquidity, institutions choosing obviously the regulated venues. But crypto being crypto having been born on the grassroots level simultaneously around the world, retail first without supervision, will always continue to have that on the edge kind of ethos for those that are willing to take the risks of that. So I don't think there's going to be anything that the regulators can do about that. So rather than focus on trying to control everything, including things they just simply can't, focus on transmitting the advantages of regulation, the protections that it can offer, as well as the clarity for both issuers and investors.
That is absolutely where we align. We agree with you, and we think that regulation will provide clarity, transparency, security. We agree. We agree, and that's a great way to look at it, just to focus on like the outcome of regulation rather than like the regulation itself. That's a great way to look at it. Looking at regulation and where you see growth and everything, do you have a picture of like the DeFi space in a regulated aspect? Do you have any idea of how that would look, out of curiosity?
Absolutely none. And that's the fun part. I mean, for one thing, what I love about thinking about how DeFi will be regulated is not so much what it will end up looking like, because to be honest, it's not heading in a very encouraging direction at the moment, and that is a bit worrying. I think in the end it'll be fine, but meanwhile it is a bit unnerving. However, the fun part is in going deeper and looking at the concepts. What are we trying to regulate here? Are we trying to regulate the outcomes, or are we trying to regulate the technologies? Governments are generally not in the habit of regulating technologies. They're generally more focused on the outcomes. What exactly are the outcomes that they're concerned about here? Transparency is something that we often hear regulators talk about, which overlooks the fact that any assets that move on a public blockchain are transparent. I mean, which leads to another question. Are we talking about regulation? Is that the main issue? Or are we talking about supervision? Is that something that the regulators care a lot more about? And you and I know that on-chain assets, easier to supervise were the regulators to run their own node and understand the data. Obviously, off-chain, that's a slightly different kettle of fish, and that is where we have seen a lot of unseen risk build up. That is something the regulators are going to be concerned about. But again, beyond the onboarding, the KYC, and the market, general market principles, what is it the regulators hope to achieve here, especially given what we were just talking about, the fact that they're not really going to be able to stop the evolution. It's going to happen either in regulated venues with their support or away from regulated venues if the support just is not forthcoming. In the end, what do the regulators want from DeFi regulation? Once they figure out that, then they can start to figure out the what and then the how. Sorry, the what are they regulating and the how to do so.
No, that's great. That makes sense. I have one last question for you, and then we have to go. This was part one because this was so interesting, and we just kind of touch the surface of things that we could talk about here. But where do you get most excited? Where are you seeing, where are you most passionate about, or you want to see most growth, or just keeping your eye on? What excites you the most?
I could talk for half an hour about this easily, but I won't. I'll be very brief. I guess growth very much depends on what sort of time frame you're looking on, and also how you define growth, because there's just so much, Jessica, in the crypto industry at the moment now that is exciting, which is why I could happily go on for ages about this. But I guess what I am most excited about right now, I would say two things I've been especially focusing. One, nothing I say is investment advice, first of all, but I am very bullish on the price outlook right now for Bitcoin and Ethereum because one of a lot of the on-chain fundamentals I've been keeping an eye on, such as address growth, such as accumulation, such as just network fundamentals, but also some of the macro shifts we're seeing. And the macro shifts are, economic largely. We're seeing resurgence of inflation in most developed economies and developing ones as well. We're seeing a growing awareness of the utility of a seizure-resistant store of value, even in countries that have highly regarded democratic systems. We're seeing the need for diversification of investments, all sorts of economic issues in the developed markets that you and I work in that are encouraging growing interest in some of these alternative assets. For instance, economic issues. Obviously, we know the United States is heading into an economic slowdown, Europe as well, even worse. So this is probably going to be reflected in stock market valuations and probably bond market valuations as well, whereas Bitcoin and to a certain extent Ethereum are not related to the economy at all, other than in sentiment and available liquidity. There are no earnings to have downgrades on, no cash flows to worry about. This alternative nature of the investment of these assets is something that macro investors are going to pay an increasing amount of attention to. But then the second thing, other than how bullish I am on the price outlook for these assets, not investment advice, is the growing adoption around the world. And this is related. The growing adoption around the world can be seen in the use of Bitcoin for stores of values, especially in countries with double-digit inflation, some of them at eye-watering levels, especially in countries where the seizure resistance quality of the store of value is especially important, and especially in countries where the lack of trust in the centralized institutions is even higher than in many of the developed countries. And you and I can scoff at the potential use of Bitcoin as a payments method because you and I have the privilege of living in societies with very robust and easy to use financial systems. Most of the world doesn't have that luxury, so Bitcoin may not be great for payments, but it's probably better than a lot of what they have. Growing adoption around the world for a variety of reasons, stores of value, payments, technology, whatever, coupled with a hard supply cap, growing adoption, hard supply cap. Again, this feeds back into the investment theses that we know macro investors are going to be paying growing attention to. So those two things, I would say right now, are front of my excitement list, but there's a lot of other factors behind them.
Wow. Well, I love your global perspective on things. It's so unique. And we were talking about the global regulation, and like it just hits different because you have a different perspective. So I so appreciate it. Thank you so much for your time today on this episode of Cboe Digital TV. Thank you so much for joining us, and I hope you'll come again because we have a lot more to talk about. Thank you.
Thank you, Jessica.